Twitter, and Postmates, just to name a few. He's also supported the cutting edge of blockchain startups as a partner at Metastable Capital. We'd like to welcome Naval Ravikant here for a fireside chat with KK Jain, founder of the incentive markets project, nCent. Yeah.
Well, thanks everyone. We have a real treat here at our next talk. We have Naval Ravikant, who for many in this room doesn't require much of an introduction, and I won't embarrass you too much, Naval, but Naval is known in this industry at least as a very early thought leader and someone that has been on point and has called many of the trends in blockchain. And I think it's a fair statement to say that many projects have Naval as a advisor or founding force. I know back from your time at Venture Hacks, you've made it a point to help out the younger generation in building out technology. So I just wanted to give a warm welcome to Naval and thank him for joining us. Thank you. All right, and with that, let's jump right in. And I just wanted to start off just a little bit broad to set the stage. Many people might be somewhat new to crypto, in it for 12 months, 2 years. But in your judgment, what is the sort of state of the union, so to speak, or where are we in crypto and in blockchain in your judgment, and sort of how does that compare to where we were called a year ago?
Down. Sorry, everyone. I don't know. I guess nobody checks CoinMarketCap as much as we all used to, right? We've definitely been through a hype cycle, and it's the nature of crypto back to the beginning of Bitcoin that it's been through booms and busts and booms and busts, but it tends to kind of go up into the right on a long enough time frame if you squint. This last run-up was very unique in that this was the coming of age of a whole bunch of coins other than Bitcoin. Many of them based on the Ethereum ERC20 platform. So we kind of went through that hype cycle. I think financially speaking, this last time it felt like we almost broke into the mainstream. We almost broke into the mainstream discourse. We almost had retail investors really participating. We almost broke into payments. We almost got Wall Street completely involved, but we didn't quite get there. But I think what did happen was that we laid the financial foundation and infrastructure for a real innovation phase. Now it is very acceptable for mainstream Silicon Valley companies and top-tier talent to be working in crypto. And those people aren't going away. They're not going to stop working in crypto just because the prices are down. I think the technology advancements that are being made on layer one consensus, decentralization, etc., are really interesting. Now we did have more than our fair share of fraud and gambling and casino-like activity. That's the nature of financial instruments and markets, unfortunately. But all things considered, we actually made it through pretty well. If you look at the first dot-com bubble, the big one, that was in the several trillion-dollar range, and the amount of actual money that was lost was very large. Like the amount that was misdirected into, say, building out fiber optic cables where none was needed and so on. But even that infrastructure innovation wave laid the groundwork for the real breakthroughs that started happening in the mid-2000s. So hopefully that's what happened here also.
Right. So you mentioned sort of this feeling of we were just on the cusp or the precipice, and many of the headlines that we see as of late, we had Yale investing in a colleague's fund, Matt Wong, and Fred Rocher on Coinbase. Yale is also invested in Andreessen's fund. We have the Bitmain IPO looming in the horizon. So where are we in this institutionalization, and what do you see the next 12 to 18 months bringing in that front? And do you sort of view this as sort of from the lens of the LPs or people that are allocating capital? What kind of signal do these sort of smoke screens or smoke signals provide to them when they're going through their process when you're talking with the allocators?
Yeah, Matt Wong and Fred Rocher and Charlie Noy started this fund Paradigm, which you could say sort of Sequoia crypto-like, because Matt came out of Sequoia, so a lot of Sequoia's LPs went in there, including Yale. And then Chris Dixon and crew started A16Z Crypto, which came out of Andreessen Horowitz, so their LPs went in there. So it's not like those LPs necessarily would have gone into non-Andreessen, non-Sequoia funds, but the fact that they did that now legitimizes it, means that other LPs aren't as scared to step forward, other VCs aren't as scared to step forward. And at this point, you can see that basically 3 or 4 out of the top funds in the world, at least Andreessen, USV, and Sequoia, have basically given the green light on crypto. And it's literally, to their credit, that is what keeps those funds alive and separated from the pack, that they're always willing to kind of go to the edge and take these risks when other VCs will sort of dither and sort of wait for it to be more obvious. So I do think there is a legitimization story there, but it's not instantaneous. The other endowments, they're going to kick the tires for another 12 months. And they've already been kicking the tires for the last 12 months. And before they didn't want to get in because the price was too high, now they want to get in because there's been a crash, right? So they can always talk themselves out of it. But I think they'll slowly start inching in. I did hear unverified rumor that there is a big endowment now that is buying like $10 million a month of Bitcoin. It's a rumor category, but you can't completely dismiss it. I think they've been doing their homework long enough that they can start doing things like that. The institutions have really been waiting for custody to arrive, high quality custodians. And they have to be both SEC qualified custodians, plus they have to be crypto technically qualified. And now you have Coinbase, you have BitGo, you have Anchor, you have Ledger, you have others who are very serious custody players. And you also have the larger institutions, larger classic financial institutions are looking at getting into crypto custody. So I think for the institutions to come in, you need to have custody, and custody is being taken care of. So that's going to be foundational infrastructure. That said, I wouldn't get too caught up in the institutions have to come in. Yes, that's where the money is, but that's not where the dream is. The power of crypto is in decentralization, and institutions by definition are centralized. We didn't create a new decentralized currency so that we could have a new bank. We created it so that you could be your own bank, or so that you didn't need a bank. And to the extent that you have more speculators arriving, which is really what these institutional investors are, it's okay, it drives up the value and it gets your coin market back up and everybody feels good and it sort of powers the ecosystem, but it is not the real revolution. The real revolution is armies of programmers deploying code for consensus mechanisms that can live outside of any single institution or dictator or king or country or mob or sovereign or company. So I think that the core underlying technology, there's a ton of innovation going on. You look at the ETH guys have really woken up, and now it's all constantly Vitalik and Cloud on Twitter going back and forth about Shasper versus FFG. Like there's clearly a race on. You can see all the new protocol mechanisms, the new consensus mechanisms coming up, the Thunders, the Oasis, the Codas of the world, right? You can see like new kinds of proof of works, proof of space-times are big now. A lot of people are innovating in that. You can see a lot of the privacy coins like Zcash shipping the sapling upgrade. Monero has shipped some big upgrades recently. You've got Grin with Mimblewimble coming up. So there's just a lot of technical activity. And it's still very much at the infrastructure layer. It's not at the end user layer. But I feel like now that the technology layer is really getting laid out. And that's the exciting piece. But if the institutions come in or not, they'll eventually come in if the technology works. So it's just a question of when, not if. But all they are is they're just a signal of the heat in the market. They're not a signal of the fundamentals in the market.
So you mentioned this, talking about developers, developer mindshare, developers working on big problems that are fundamental to enabling scalability infrastructure, all those fundamental challenges in the space. What are some of the biggest problems or biggest kind of broken markets or broken incentives that you see out there that you wish more people in general, whether they be technical or not, entrepreneurs in the space, should be working on?
Yeah, well, there's stuff that people are already working on, which is, I don't think any of the coins are that decentralized yet. Bitcoin is still probably the most decentralized large asset financial instrument that's ever existed, but it's still not sufficiently decentralized because proof of work tends to have a consolidation around the mining. It's just much more efficient to mine within one data center than it is to spread out across many data centers. We also don't have enough developer decentralization yet. Within multiple coins we do. In fact, the existence of all multiple coins, the existence of different dev teams. But if you look at like each coin, there's usually only one serious dev team, one serious client within each of the major coins. That's the table stakes. Beyond that, I think two big areas that have not been properly addressed. One is distribution of the coins themselves. Like how many actual Bitcoin users out there in the world today? The estimate I've heard is around 25 million, and maybe right or wrong, but it's within the tens of millions of range. It's not hundreds of millions, it's not billions. So not enough people are using these. How many machines, how many pieces of code are using Bitcoin? They're actually the more likely adopters than humans sending payments to each other, and not enough of those yet. There aren't enough pieces of code that existentially need Bitcoin or Ethereum to function. How many dApps are out there that are up and functioning? Not good. How many high-quality end-user secure wallets on Android and iPhone do we have, right? That infrastructure doesn't exist yet. So there's a lot of infrastructure that still needs to be built out. I think the coin distribution problem is a big one. Bitcoin, when it first launched, there was a brief moment in time where you could have mined it without being Bitmain, without having a special mining pool or a data center kind of setup. So in that sense, it got a quote-unquote fairer distribution. But a real fair distribution would be to give one to every human on Earth, or maybe two, like one for now, one for later. And how do we
I know in our conversations you've talked about Faircoin, or a concept of a worldwide public distribution. Maybe you could share that with
Yeah, Faircoin is just this idea that there are many teams out there trying to do this, someone out there is going to figure out how to get coins into a lot more people's hands. So the great thing about a proof of work distribution is it's permissionless. Even if I'm in Venezuela and there's no functioning exchange, I'm not legally allowed to buy it, I can still mine it at home as long as I can kind of generate the electricity and I have a server. The problem is that today proof of work mining has become much more consolidated. My home computer is not going to make much of a difference. And proof of stake, like Ethereum, the way they would distribute widely, Ethereum is still proof of work, but the way proof of stake coins distribute widely is they try and do a ICO. But now with the regulatory crackdown, people are scared of ICOs. ICOs only go to a small number of rich accredited speculators, so it's not really distributing the coin. So the newest thing to come along is airdrops. So you can see like Handshake did a developer-focused airdrop, Dfinity did a community-focused airdrop using CoinList, which I'm involved with. So there are other ways to kind of get coins into broad hands, but somebody has to figure out how to get coin into enough people's hands that enough people in the world will say, oh yeah, I'm willing to trust this as the new system of wealth storage and transfer and payments. Because it's very hard for me to imagine that 6.9 billion people are going to say, actually, we don't have any of this money, but we're going to go ahead and anoint these geeks who got here first, the 100 million of them that have all these coins, and this is the new money, this is the new store of value, you're the new oligarchs, you're the new overlords. History doesn't work that way. You generally don't get to take the money without having the guns. And this is not the armed crowd, right? This is the smart crowd, we're not armed to the teeth. It's not possible to have a bloodless revolution where you transfer tens or $100 trillion in wealth peacefully. So the only way to do that is to bring everybody along. So I think there has to be some concept of how do we get these coins into other people's hands, and it's a very hard problem in a fair way. And the only answer we've had to date was proof of work, and then a little bit was this whole ICO phenomenon, and we don't have a great answer otherwise.
So, I know that you've been involved in lots of internet technologies. You've had a front row seat, back from Opinions Diamonds to present day working with AngelList. What is it that sort of je ne sais quoi in your view that is the kind of blocker for wide-scale viral adoption? Are there analogies to the internet, and do you kind of see this as a bit of a grind or a slogging kind of process, or is it something that maybe it's sort of a step function that if someone kind of cracks the code, so to speak? But what are some of the elements or signposts that you think are kind of holding back that kind of viral adoption?
Yeah, I think the obvious ones are just that there isn't really good wallet software. There isn't a killer dApp. Those are kind of the obvious ones. That we also just haven't had the combination of a major nation state's currency collapsing while that population has access to a high quality cryptocurrency that they can use on their mobile phones. Like that intersection hasn't happened. That would be one powerful driver. But I would just be honest and say, I don't know. I don't think anybody knows. This is such a new phenomenon, such a new system, that it's very hard to draw analogies. We redefine what money is, not even every human lifetime. It's in between several human lifetimes. So there's nobody alive today, who's really watched a transition of this order. Or maybe there are a few people alive, but I'm not even sure the analogies apply. When something happens like twice in a generation, like twice in 20 years, then you have some smart, wise traders or investors or entrepreneurs who are like, oh, I've seen this before, this is how this plays out. There's no real analogy here. You're basically intersecting money with governance, with technology. And there's the Silicon Valley types who argue programmability technology is what matters. There's the Austrian economist types or the anti-bank types, sovereign individual types who argue it's a sound money that matters. And then there's a set who are talking about potential for governance and new kinds of market mechanisms that we're creating here. So I don't think anybody knows. I think we literally just have to do our best and watch it play out. My guess is it is a long slog. I think the chance for crypto to win in sort of that surprise attack where Bitcoin takes over the world, that time period came and went. It's not going to sneak up on anybody now, right? So I think at this point, it just means there's a lot of hard work and a lot of patience. To some extent, every time crypto survives a major bug, it kind of deserves to go up in value. It's a Lindy effect, as Nassim Taleb would say, right? It survived just a little bit more. So there's this recent Bitcoin inflation bug, which fortunately didn't get exploited, but that's the kind of catastrophic bug that would prevent somebody from treating it as purely digital gold. But the fact that we survived that, made it through, now makes Bitcoin a slightly better store of value because it's been through that when maybe another coin hasn't. And I think as it just goes through and survives more and more and more and more of these things, as it demonstrates its anti-fragility, then it deserves to go up in value. But it's a long and slow process. I don't think it's an overnight process.
Right. So, we're sitting here in San Francisco at a blockchain conference, and so in some ways we're presenting the vision or preaching to the choir a little bit. In terms of wide adoption of mindshare, there's been a number of sort of high-profile skeptics, whether it's the traditional old guard investment types, the sort of Jamie Dimons and Warren Buffetts of the world, and just other categories of people that just say, hey, maybe the use cases are limited. Just kind of playing the kind of philosopher's hat or devil's advocate hat. What do you actually think is the strongest argument of the sort of genuine skeptics? Maybe we can kind of start with that and then sort of...
Yeah, they have a couple of strong arguments. One is that in many cases when people try to apply blockchains, they'll say, well, blockchain's not needed, it's just an expensive database. That's a good, sophisticated argument, and I would generally agree with that. I only think a blockchain is really needed when you need censorship resistance, state-level censorship resistance, because the government, local government is printing money or controlling the flow of funds. Second is what I would call permissionless programmability, which is, if you're a developer of the Twitter API and Twitter shuts you down, you have no place to go. Whereas if Twitter was running on a blockchain, then you would have a much more open mechanism. People could invest into it and build an ecosystem around it. And the third one, which is a very related point, is sort of using it as a shelling point to coordinate an entire industry. Because it's easy to build a company in a proprietary database. You can't really build an industry in a proprietary database. Or you can, but it's fragile. The rest of the industry doesn't like it and eventually tries to take it down. So to the extent that like a Filecoin or someone can create a shelling point, for its game theory mechanism, just everyone can get together around one thing. If they can create this mechanism where everybody who's competing with AWS can buy, sell, provide services around the Filecoin ecosystem, then that has some value. But outside of these fairly narrow use cases, you're better off not using a blockchain. Because blockchains are incredibly inefficient, as everybody here knows. You're keeping a copy of everything with everybody for the most part. So I think one strong counter argument they have is that we, in the frenzy, we try to apply it into areas where it's not applicable. Another counterpoint that they give is that the government will never allow it. You know, a lot of the more interesting applications of blockchains do run counter to the control of the modern welfare nation state exercises, including the right to censor transactions and the right to print more money and the right to dilute you, the right to take your money back out of your bank account. You know, there's even a nightmare scenario where crypto ends up being the government's most powerful tool. Imagine if the Chinese renminbi or the US dollar were run entirely on crypto. They could just hit a button and print money. They could hit a button and add money to wallets. They could hit a button and delete your wallet. They could hit a button and track every transaction ever done. It's a totalitarian's wet dream. So you know, it could completely backfire on us in that sense. So I think they have a legit point of view that it actually runs counter in some ways to the way the current governments are constructed, just in the way that you know, any human rights, ranging from markets to corporations to individual rights, takes away some power from the government. It's always a negotiation between the individual and the government. But we live in a day and age when the governments are actually very powerful. They're very strong. It's the nuclear age, or the transition from out of the information age. So. Will governments allow it is a big deal. I remember when crypto was first sort of starting to take off in Silicon Valley, 2013 kind of time frame. A lot of the people who resisted were the people who were early at PayPal, because they had seen what happens when you try to send money without being a money transmitter, without the government's permission, and they'd gotten shut down really fast. So it took them a little longer to come around on it than people who didn't have that PayPal experience. And when you look at people like Warren Buffett and Jamie Dimon, they're used to operating completely regulated atmospheres, right? They're always watching out for the SEC and FINRA and the CFTC and NYDFS and all that stuff. Crypto's global, crypto's distributed, crypto's anarchic, crypto's cyberpunk. It comes from those roots, and those roots are embedded at the core algorithm layer. They're not going away. You can pretend that crypto, plays well with the state, but it doesn't. Not the way it's written in the code, not the way it's designed. So I think they have legitimate points of view that the government will probably not condone most of it, and it's not applicable in most fields. But I think the argument is that A, it doesn't matter. Some things are larger than governments, markets are larger than governments, and this is a global phenomenon. And second, yes, it may not apply in every field, but in the fields where it does apply, it's incredibly valuable and incredibly important. I mean, if you can redefine what money is, you redefine the economy, you redefine society. So it doesn't have to have a lot of applications.
Sure. And so kind of wrapping it up as a final summary, what do you view, given all these backdrops, as sort of, you've been on the record in talking about your investment thesis in blockchain. How does that synthesize for you in terms of your updated model of looking at projects and deploying capital? How does that kind of impact the crossroads of where we are now over the next year or 2 years and over your investment horizon?
Yeah, I deploy mostly through my investment in Metastable, which is a crypto hedge fund that I helped start back in the day. And we're still very much focused on deeply technical teams, usually coming out of universities, people like yourself, who are working on layer one kind of scaling, decentralization, consensus mechanism, distribution kind of problems. And so, and people who would be working in blockchains, even if it wasn't cool and wasn't making them money, people who were working in crypto distributed systems, years ago. So it kind of helps you sort of separate out the wheat from the chaff a little bit. So that's an area that we still continue to invest strongly into. I do see the rise of what I would call, I don't think I made this, I think Spencer Newton made this up or somebody, but I like the phrase, shadow financial system. I think of it as, now with companies like DYDX and Karma, and there's a zillion of them, the DEXs and 0x and so on, we're starting to see Everything Wall Street does that is custom and exotic, and you know this, you were at D. Shaw, if I remember correctly. Everything Wall Street does in terms of high frequency trading, the CDOs, the junk bonds, the leveraged securities, the custom swaps, all the crazy stuff that Wall Street invents. This is all done by bankers wearing ties and suits and making $1 million a year in bonuses, done over the phone between like Goldman and somebody else, and it's all very manual. And I think there's going to come a day, 2 or 3 or 4 years from now, where we're going to see that everything they do, crypto does it better. And it does it better on ETH or on top of ETH or similar ETH-like platforms, DApp platforms, where you can do trades 24/7, global, trustless, all the derivatives are there, all the shorts are there, you can, stable coins are there, you can trade commodities, you can basically construct a hedge, a bet, insurance, a swap, an index for almost anything you can imagine. And at some point, Wall Street's going to look at this and be jealous. They're going to say, wait a minute, I can execute the trade I want actually on crypto. I can't really do it in the normal financial system. So the shadow financial system will technologically exceed the regular financial system within a very short period of time because it's open, it's permissionlessly programmable. It's got thousands of brilliant hackers working on it around the globe. And that global permissionless shadow financial system, it's going to be very interesting to watch who plays in that, what it does, and how much of the global market starts moving over. In the early days of crypto, we thought that the interesting activity was going to come from the dark markets, Silk Road, Ross Ulbricht. It may actually come from financial markets on crypto that are bigger than the traditional financial markets, or will eventually become bigger.
Right. I think that Wall Street is most certainly taking notice. Just as a final thought, there's sort of a lot of young people. One of the things that really excites me every day is just the amount of energy and fervor, whether it's at Stanford, looking at blockchain course enrollments. One of the things that I really love is I'm like the oldest guy at my company. So what is your kind of parting advice here as we wrap up to maybe young people in the audience, maybe young computer scientists and developers and scientists, or even non-technical people that know they want to be a part of blockchain, part of the story, they want to bet their careers on this, but they're just sort of unsure where to start, unsure what projects, or what's sort of a framework or a guidepost that you might offer as advice to sort of a young person wanting to get involved?
I mean, if you're technical, contributing to open source projects is always an amazing place to start. Like, there's never enough eyes on the code. Even if it's someone who's just reviewing the code, looking for bugs, debugging, just helping out, even writing, technical papers, writings, readmes, FAQs, things to kind of help with the technology development. For all of Bitcoin's incredible thunder and valuation and impact, there's like a handful of developers working on it. It's tiny. So it's very easy to make a difference on the code base, and by that and after that you can build a gargantuan reputation. Everybody wants to hire someone who's worked on the Bitcoin or Ethereum or Zcash core code base, right, or Monero or what have you. So I think that's an obvious way. Community development is a big deal. There's still, I still have a very hard time. People say, teach me crypto, right? Yeah. Pointing them to like the master set of resources, very hard. Part of it is nobody accumulates the master set. Part of it is that everyone has their own agenda and their own point of view. So you might end up with an XRP maximalist over here, or a Bitcoin Cash maximalist over there. Keep an open mind. Don't be too tribal. Nobody knows. So I think just constantly educating people, building communities is very useful. And we're always coming up with new things. It's always a moving target. Like what's going on, the latest with Zcash and Monero and privacy. How do bulletproofs compare to whatever's going on in Saplink? Can you build a compressed blockchain ZK Snarks, or should you go for ZK Starks? Are trusted setups and multi-party computation really viable, or are they like a temporary thing? Right? So it's all these questions, they're always coming up. So just learning and then synthesizing and communicating and helping people and building a community around it, I think is also super helpful. So that's a perfectly fine way to start. At the end of the day, just start whatever interests you, because that's what you're going to stick with. And whatever interests you and you stick with is whatever you're going to be good at. Like if you try to do something because you see somebody else doing it, it's not going to work that well, right? And there's so many great little places to just insert yourself. Like as an example, I would point to Eric Meltzer's Proof of Work newsletter, right? Well, what Eric did was he very cleverly basically went to a couple of top projects and said, hey, do you want to keep investors up to date? If you just give me your update every week as to what you've done on the tech side, I'll just ship it out to a bunch of investors. And now he's got one of the hottest newsletters in town. All the top crypto projects write in, all the investors review it and watch it. There are people who build Telegram groups and Slack communities that have a lot of interest. So I think can either working on the open source piece or on the synthesis and communication, those are really good areas. If you're a lawyer, help somebody out on the legal side. If you're in politics, help us out on the lobbying side. Help make it so that small crypto transactions don't have to be reported and tracked for tax reasons. Help us with the tax accounting and tracking. Help us with the legality of it, defending it on First Amendment and freedom grounds. I think we all have to be ready for the day when crypto gets nailed with a really bad transaction. Okay, it's kind of inevitable that something terrible is going to happen, and whoever instigated it, instead of using gold or diamonds or pallets of USD, they use Bitcoin or ETH or Zcash or Monero or something along the way. And it doesn't have to be a lot of it. It could even have a small component, but the press and the politicians will seize on a narrative. And if you look at Republicans or Democrats, wherever you stand, the one thing they tend to unite on is national security issues that take away your freedom. Right. Things like the Patriot Act, the sort of NSA surveillance. Edward Snowden outed them completely, yet nothing has happened about it. So I just worry that we're one sensational incident away from a coordinated crackdown on our freedoms of crypto. And fundamentally, crypto is just code. It's just math. It's just written down math. And code is just speech. And speech is just thought. So at some level, to shut this down, they have to control your thoughts, but doesn't mean they won't try. So I think it's very important to lay the groundwork for crypto from an individual liberties and human freedom perspective, so that it doesn't automatically become a scapegoat. Because the government loves scapegoats. If something bad happens, they don't want to say, oh, it was our fault on our watch. No, it was crypto's fault.
All right. So we'll leave liberty and freedom as the final rallying cry here. I think there was a lot of really straightforward